Hello everyone. In today's session, I am going to explain chapter 2 of part 1 Foundation for Finance, that is banking in India. Let's see the content which I am going to explain today, such as evaluation of banks, introduction and definition of banks, meaning, need, as well as functions of bank, types of bank deposit, such as demand and time deposit, NRI account, then PM Jan Dhan Yojana, traditional and new age banking, debit card and credit card, digital payment system, role of RBI, functions of RBI, and lastly, key policy rates, which is given by RBI. Now let's move further to first content, that is evolution of bank, that is history, how bank came into force. The first bank in India, I'm talking about the first bank in India, that is the Bank of Hindustan, which was established in 1770 and liquidated, that is shut down in 1829 and between 32. As well as the next, that is General Bank of India. This is also fell in 1791. Then once it is fell, Presidency banks was initiated. That is, government of Bengal have took initiative, and they have formed one bank, that is called as the Bank of Calcutta, that is Bank of Bengal, was established on 2nd January 1809. Later on, during that phase only, you also will see Bank of Bombay as well as Madras. Independently, these all are independent, but if we will call them as a presidency bank, that is a Bank of Bengal, Bank of Bombay, as well as a Bank of Madras. These all three we will call them as a presidency bank. Later on, government want to unite them, so they convert this presidency bank into Imperial Bank of India, that is acted like a central bank. During World War, this one British government feel that they required one bank, that is unified banking institution they required. As a result of which Imperial Bank was set up in 1921. Later on, in 1955, once we got independence, we convert this Imperial Bank into State Bank of India. During 1969 to 1991, more than 25 banks have been nationalized. This is also evolution, as well as bank have taken major reform in 1991, that is because of LPG policy. Now coming to bank, the word bank is term bank is derived from Italian word banco, as well as a French word banco, which means a bench or money exchange table. Like if you have seen in older days, that is in old days, European money lenders or money changer used to display coin of different current countries in big heap, that is quantity, on benches or table. So for the purpose of lending as well as the exchanging. As a result, this is termed as a bank. Then move forward to definition of banking, that is according to section 5 subsection C of Banking Regulation Act 1949. A banking company as a company which transact the business of banking in India. That is, if banking means those who are doing banking business, that company is said to be banking company according to this section. Then so next definition, that is banking, if we look, we will arrive, that is simple, they have given in the Banking Regulation Act 1949, that is accepting amount for the from the public for the purpose of lending or investment and repayable on demand, that is said to be banking. That they have prescribed here, that is section 5 subsection B, defined as accepting for the purpose of lending or investment of deposit of money from the public. That is, you are accepting money from public for the purpose of lending or investment. Repay, when you will pay to public, that is repayable on demand or otherwise, or withdrawable. That is, when they will demand, you will repay them. through how they will demand means through check, draft, or order, or otherwise if they demand, then only you will sanction them amount. Then move forward to next one, that is meaning of banking. Meaning of bank is very simple. That is, the term refers to bank financial institution which deals with the deposit and advances and other related services. Okay, bank is a financial institution which deal with deposit and advance and other related services. Bank receive money from those who want to save in the form of deposit. Okay, deposit, it may be several deposits, we have types of deposit, but if you are collecting for those, that is, bank receive money from those who want to save in the form of deposit and lend it, mm, money to those who need it. Okay, that is mobilization they will do. Bank also provide financial services such as wealth management, currency exchange, safe deposit boxes, etc. Apart from this, if we look, we have several types of bank, that is central bank, commercial bank, cooperative bank, development bank, and so on. In most of countries, banks are regulated by national government or central bank. That is, in India, that is central bank, that is RBI, what we have. Then type of deposit, if you want to types of bank, if you want to look detailedly, means we have RBI which control all, that is a commercial bank, cooperative bank, development bank. In commercial bank, we have both, that is nationalized as well as private. Cooperative also we have short term as well as long term. In short term, we have agriculture credit, urban credit. In development, we have Exim Bank, that is export import bank, industrial development bank of India. Here SIDBI also will come. Then agricultural bank, that is NABARD. So these are all the types of bank. Then why we required bank? Why we required bank? Here we required bank because of saving and capital formation. Okay, bank play a vital role in mobilizing the savings of people and promoting the capital formation for the economic development of a country. Bank, how they will do means they will mobilize, that is, if I don't want amount, if I am not using my amount, means if I deposit that amount, maybe 10,000, likewise several, maybe 10 peoples are there just like me, they don't require money, they just want to deposit for a safety purpose. If 10 members deposit 10,000 rupees, that is equal to if each member deposit 10,000 rupees, means that is totally 1 lakh. That 1 lakh they will give unto someone, another person, for the purpose of investment, that is capital formation will be happen like that one. Like that one only. Same, that is the channelization of saving, that is mobilization of savings are allocated by the bank for development of various fields such as agriculture, industrial, communication, transport, and etc. How they will, where they will channelize your saving means they will channelize your saving towards development of agriculture, industrial, communication, as well as transport. Then apart from that, the implementation of a monetary policy, that is money related policy, also they will implement for the purpose of economic development. Then apart from this need of bank, if we just move further, we have encouragement of industry. Okay, if we look encouragement of industries, how they will encourage? They will encourage by providing or granting loan. Okay, if someone required amount, means they will they will provide that much of amount. Likewise, they will promote them. Then apart from that, regional development, by transferring surplus money from developed region to less developed region, bank reduce regional imbalance, that is from urban to rural area, they will transfer amount. Likewise, um, regional development also will consistently, it will grow. Apart from that, development of agriculture and other neglected sector, that is such as a small scale as well as cottage industry in rural area, for to them also they will provide loan. So these are all the requirement of banking what we have. Then if you move further to next one, that is the functions of bank. Acceptance of deposit, that is first function is accepting of a deposit. A bank accept money from people in the form of deposit, which are usually repayable on demand or after the expiry of a fixed period. It gives safety to the deposit of its customer. It also acts as a custodian of funds of its customer. That is, first function of banking is to accept your deposit. If you provide amount, means they will accept, and also they will also safeguard your amount. Because of that, it is just like custodian of your fund they will do. Then whenever you want, they will repay you. If it is not in fixed, if it is fixed deposit, means after the expiry of a period, they will repay you your amount. Then apart from that, giving advances and loan, bank next question, that is a bank lend out money in the form of loan to those who required it for different purpose. These loan can be in the form of retail loan, loan given to individual, or corporate loan. Both type of loan a bank will provide. They will provide a loan to individual as well as to businessman. Okay, they will provide a retail loan, that is to individual. They also provide a corporate loan to businessman. Apart from that, we also have functions such as payment and withdrawal. That is, if you demand, they are ready to repay you. Such as how customer they have to, bank is providing several facilities such as a check, draft, debit card, ATM, etc. Through that one, you can withdraw your amount. Or faster way, that is UPI. Okay, through UPI also you can transfer your money from one bank to another bank. Then apart from that, ever increasing functions such as agency as well as a utility function. That is, they also provide functions such as portfolio management, that is wealth management, utility services, agency, insurance, mutual fund, advisory services, and in all many functions they will perform. Such as in next slide, if you have looking here, in accepting deposit, that is a primary function of bank. That is saving deposit, they have fixed deposit, they have current deposit, and recurring deposit. Four types of deposit bank will provide. Then granting advances, overdraft facility they will provide to current account holder. Cash credit they will provide. Loan, discounting of bill also they will provide. If you want repayment of your bill before maturity, means they will discount your bill and they will repay you. Then apart from that, agency in secondary function of a bank, that is agency as well as utility, transfer of fund they will do from one bank to another bank. Periodical payment they will pay you. If you have set up that one services, means they are ready to pay. Such as like I've said, maybe electric bill or phone bill or something. If you have a if you have ordered them, means they will regularly pay. Or rent they will pay. Collection of check, portfolio management, periodical collection, and other agency function also they will perform. Utility function, draft they will provide. Lockers services they will provide. Underwriting services to companies. Project report, if you are having any difficulties in preparing project report, means you can take help, or bank will assist you to prepare project report as well for commission purpose. Then social welfare program and other utility function also they will perform. So these are all the functions of banking or banks. Then next, that is the types of deposit. In previous slide you have seen four types we have, that we will understand here detail. Now deposit, here we have two type of deposit, that is demand deposit and time deposit. In each we have sub points, that such as in demand we have a current account, saving account. In RLs, current deposit or saving deposit, and then time deposit in fixed deposit as well as a recurring deposit we have. Let's move to first one, that is demand deposit. Demand deposit are those that can be withdrawable or transferred by the customer without previous notice to the bank. The deposit are maintained to meet liquidity and transaction needs. That is, without informing bank, you can withdraw amount. You don't have to provide them 1 week prior notice to them. You don't have to provide notice to them. You don't have to inform them. That is, in next month I am going to take this much of amount from my bank. No, you don't require to do anything like that one. In demand deposit, whenever you demand, bank have to pay. So here we have two types, current account as well as a saving account. Coming to current, like in picture you have seen, if a company open bank account means they will get a current account, such as in detail, that is a current deposit account or a demand deposit account is running and active account, which may be open with a bank by businessman or an organization. The account can be operated any number of time during a working day. Okay, this is the major function of this current account. Major change, that is number of times you can operate this account. There is no limit. That is a current account is a business account and can be opened by individual, firm, HUF, trust, companies, both private as well as public, societies, clubs, and association who operate for profit. That is all. Every man, every human being can open this current account if you are ready. If you are doing business, okay, if you are doing business means you require a current account, because you will daily several time or multiple times you are doing transaction. So as a result, you require a current account. Futures also we have a few, that is they do not carry any interest payment. That is, if you deposit 1 lakh rupees in your current account means you won't get a single penny from bank account. Instead of that, you have to pay. Okay, you have to pay amount charges, you have to pay to bank because you are maintaining a account here. Apart from that, overdraft facility can be allowed in this current account. Bank will provide you overdraft facility. That is, overdraft means it is just like you can draw over then what balance you have in your account. That is, suppose if you have in bank account you have 1 lakh rupees, but you have emergency, maybe you have purchased 1 lakh 50,000 item. You can Bank will provide 50,000 excess amount more than what we have in your account. That is, overdraft facility also they will provide to current account holder, but you have to pay within due days. You have to clear that payment. The next saving deposit, moving further to saving deposit, that is open by individual. Okay, businessman open that one. That is just like a saving. You are saving for the purpose of saving. If you open account, that is said to be saving account, is very popular among general public, is meant for small businessmen and individual who wish to save a little out of their current income, safeguard their future, and also to earn some interest on their saving. Okay, interest will fluctuate. Nowadays, very less amount of interest you are getting from your saving account. Your saving account can be open of that is minimum balance also you have to kept if you want to open saving deposit. Next, move forward to next types of deposit, that is time deposit. As a word, that is term deposit is also called fixed deposit. These are repayable after the expiry of a specified period varying from 15 to 120 months. The period is fixed at the time the deposit is made. Bank in the India are offering several okay, to their customer. They are offering this type of services, time deposit. Coming back to here, also in time deposit we have two types, that is fixed and recurring. Coming to first, fixed deposit. Money in the account is accepted for a fixed period, say 1, 2, or 5 years. The money in this deposit cannot be withdrawn before the expiry of a fixed period unless if you are ready to what we will say withdraw, means if you want prematurity withdrawal, then you have to pay penalty as well. As the rate of interest on this one is higher. Okay, the rate of interest, if you compare with all in current account, they won't pay you interest. Instead of that, you have to pay interest to them. In saving bank account, they will pay you only less amount, maybe 3 to 4% of interest they will pay. In fixed deposit, they will pay you 7, 8, 9, 10, up to 10 they will pay. Few bank it differ from bank to bank. Apart from that, let's move forward to next one. That is another thing here. The deposit constitute more than half of total bank deposit. That is, in bank, if the more than 50% belong to fixed deposit only. What deposit bank have, that is more than 50%. It is relating to fixed deposit because customer will earn more amount as well as they will get security. on their deposit. That's why they are ready to invest. The next one is recurring deposit. The recurring deposit account has gained popularities nowadays. Under this, the depositor is required to deposit a fixed amount of money every month for a specified period of time. After completion of a specified period, the customer get back all his deposit along with cumulative interest accrued on them. That is, every month you have to pay, or every month you have to pay. That is, maybe if I am depositing 1,000 rupees, means after 5 years they will provide me principal as well as interest, that is cumulative interest on all amount they will provide. That is, cumulative means interest on interest, simple. um, why you required to open this one means for the purpose of education of your children's marriage, for rest, or etc. You have to open this recurring account. Difference between fixed and recurring means, in recurring you don't have to invest lump sum amount. Okay, in recurring you can invest a small amount for a fixed period, but in a fixed deposit you have to deposit all amount at once. Okay, only two difference we have. Apart from that, in fixed deposit we will get a more rate of interest as well as compared to recurring. Then next, that is non-resident account. Coming to non-resident account, who is non-resident, who is NRI, you have for the purpose of this, if you refer um, Income Tax Act 1961, Section 5, there you will get a residential status of an individual. That is, we have several points through which we will identify whether citizen is ordinary or non-ordinary or non-resident or not resident. That in where you just have to refer Income Tax Act Section 6, Section 6 of Income Tax Act 1961. If you refer that one, you will get a detailed understanding regarding who is NRI. Now coming to accounts, we have several account, that is rupee account. NRI can be open following types of rupee account, that is non-resident, ordinary account, then non-resident rupee account, that is external. Just I will explain. If individual, if you have one account, this one non-resident you have, but you are collecting receiving amount in India, in that case you can open this NRI. Or if you have a what we will say saving bank account in India, and if you move abroad, then the saving account is converted into NRO account. NRE account will be just like if you want to deposit amount from foreign to India, in that situation you can use a NRI account. But in both cases, this is the amount will converted into rupee. Okay, if I deposit 10,000 rupees, $10,000, the $10,000 will converted into rupees. That is in both situation it will happen. But a few limitation we have in NRO account. Because of that, you have to opt for a NRE account. That is a few transactional limits we have, just like a saving account. What we will say, in saving deposit we have no several transaction limit, that is daily you have to you have this much of limit, just like that one. This NRE is just like current, you don't have limit, you can do how much transaction. It is just like that one, you can transfer how much amount you want. So that is one difference what we have. NRO account is open by you can collect amount from India as well as you can deposit, but a few limits we have. NRA accounts, you don't have limits, you can transfer amount. But if you transfer amount in dollar or euro, the amount will convert into rupee. Because of that, this both will comes in rupee account. Then next we have a foreign currency account, that is non-resident foreign currency account. Here what will happen means, if I deposit um, $10,000, the $10,000 won't convert into rupee. Because of this, this is a foreign currency account. Few things we have, yeah, difference between NRE and NRO, that is both will denominate in rupees only. Types we have same saving, current, deposit as well as term. who can open NRA, NRO, like I've said, NRI as well as NRI as well as resident before becoming an NRI. That is, if I having saving account, if I move abroad, the account is converted into NRO. But here it is not like that one. Once you move abroad, if you want to open account means then you can open NRE account. Then apart from that, uh, transfer, that is fund receive from within India, you can have here abroad, as well as um, yeah, abroad amount you can use here, as well as you can transfer amount from one country to another. Transfer fund can be transferred from an NRE account to NRO NRE resident account. In all types of account you can transfer your currency, but in case of NRO, fund can be transferred from NRO account to NRO or resident account, but you can't transfer to NRE account, you can't transfer. So this one is the limitation what we have in case of NRO account, as well as a transfer, what I say, if you want to transfer currency, that is rupees what we have here, to your another account, means you have limits. You don't have limit in NRE, but you have limits in NRO. These are the few difference. Apart from that, we have several. If you go through means detailedly, you will have several difference. Yeah, these are the only few difference between NRE and NRO. Then move forward to foreign currency account. Like earlier I have explained, these are accounts where NRIs hold the balance in foreign currency. That is, the amount is not converted into rupee once if you transfer. And that this type of account are maintained in British pound, dollar, yen. In that one, if you deposit once means it won't transfer. That is just like fixed deposit. It won't change. Then apart from that, if you move forward to next concept, that is deposit insurance. That insurance of bank deposit also they will provide to ensure the depositor about the security of deposit in any kind of account with bank. The deposit insurance and credit guarantee corporation was created by government of India in 1961. The insurance also they will provide up to 5 lakh rupees. That is, if I have a 10 lakh rupees account balance in my bank account, but bank is get bankrupt. In that situation, that is due to bankrupt, bank this insurance company will pay you 5 lakh rupees. Up to 5 lakh rupees they will pay per account. They will pay 5 lakh rupees irrespective of how much balance you have. That is, if it is more than that one. If it is less means they will, if my account balance is 1 means they will pay 1 lakh. If my account is balance is 10 lakh 50 lakh, but they will pay you 5 lakh so that you will manage. So apart from that, moving forward to these are the insurance scheme what we have. Then next, Pradhan Mantri Jan Dhan Yojana. If we move further to this one, to provide assist, okay, say to help saving, basic saving as deposit account, remittance, credit, insurance, pension is in affordable manner. This financial inclusion is created given by current government. Under this scheme, the basic bank deposit account can be opened in any branch or business correspondence outlines by person not having any other account. If you don't have account means you can open this easily. What you will get benefit of opening this instead of saving account means, let's see what are the benefit you will get from Pradhan Mantri Jan Dhan Yojana account. Benefits such as one person basic account is open for unbanked person. That is one benefit. You can open one account. There is no minimum balance. That is zero account. You can have zero account balance account. This is if you just look other saving account means it differ on what we will say region wise. Minimum balance will change. 500 to 2000, up to 2000 you have minimum balance you have to keep. Nowadays in private or foreign banks are asking more than 10,000 50,000. They are asking as minimum balance. Maybe you have heard that one. But if you open account with this scheme means Yojana means you don't have to keep amount in your account. Interest is earned on deposit interest also they will pay you, as well as they will provide you repay debit card. Debit card also they will provide to account holder. Then insurance, accident insurance also they will provide up to 1 lakh, and it is changed to 2 lakh. Okay, new that is in 2018, it is from 1 lakh to 2 lakh, it is upgraded. Apart from that, overdraft facilities also available up to 10,000. That is current account holder, how much they will get. It is just like that one. Overdraft facility also they will provide you to eligible account holders. They will provide up to 10,000. This is are also eligible for direct money transfer, Pradhan Mantri Jiva Jyoti Bhima Yojana, then several scheme, Mudra Yojana, and for several scheme also you will get to benefit if you open this account. Then next, the difference between traditional and new age banking. Neo. Neobanks, let's see, traditional banking we already seen, and you also have seen that is banks such as State Bank of India, Canada Bank, Bank of Baroda, and several Karnataka Bank, and several bank that all comes on the traditional. Let's see what is neobanks. Neobanks are changing the face of fintech by bridging the gap between the services that traditional banks offer and evolve the expectation of a customer in the digital age. Neobanks are online only financial technology. That is online only financial technology. It is a company that operates solely digital or via mobile app. If you want to look, let's move further, you will understand better now. Neobanks are digital banks without any physical branches, offer services that traditional banks offer. That is, these banks don't have any physical branches, that is no structure. They only operate it through digital or with the help of mobile apps. You have to use this one. In India, this bank do not have any bank license of their own, but rely on a partners firm. Okay, if a partners firm get license, means with the help of them they will operate in India. Apart from this difference also, here I have a few difference, just check it out. Roser Pay, maybe you have seen Roser Pay, we have Jupiter, we have and many banks are there. Okay, these are all the or else Paytm Bank, best example. If you want to know, means Paytm Bank is also neo bank. They don't have any physical what we will say branches, but then too they are operating very well. So this will comes in neo banking models. Now coming to debit and credit card, I hope you know this one. Debit card are issued by bank against a current or saving bank account. When current account holder will swap, means they amount will directly withdrawn, or payment is made through what we will say their bank account. They can also use ATM if you want to withdraw. But the problem is in emergency situation, they won't get, if they don't have a sufficient amount, they won't get overdraft facility. But in case of credit card holder, they will get overdraft facility. Interest is charged on outstanding amount only in case of delayed payment. That is, if I have taken a 10,000 what overdraft facility, I have paid 5,000 rupees, 5,000. If I have not paid, means remaining on 5,000. What amount? Delayed payment on 5,000. I have to pay interest to bank. That is debit card. You can say limits you have, in credit you don't have limit, and you can access and you will get overdraft facility. Only overdraft facility difference we have nowadays. We don't have enough difference. Credit card offers several offers they will provide credit to credit card holders, for but for debit card holders you won't get that much offers. That is another difference what we have. Then digital payment, if you move further, how you will do digital payment, means with the help of a paper clearing, MICR, we have non-MICR, check, we have express check, we have through that one you can transfer amount, you can pay amount. Then bulk electronic transfer, such as electronic clearing services, we have here we have several based on region. We have national, we have automated clearing house, we have both debit and credit. Then card payment, through card payment also you can withdraw amount. That is how within India how you can make a payment with the help of a check. Paper you can pay, electronic media you can use, card payment you can use, large value That is, if you have a large amount, then you can use a real-time gross settlement. Less amount of NEFT you can use, that is NEFT and RTGS, but you have to pay charges for them if you want to use RTGS as well as NEFT. But moving, if you want to use fast payment, that is quick payment, if you want, you have to use IMPS, that is immediate payment system, or else unified, that is UPI, what we are using now. Then except first one, all are relating to digital transaction. Okay, except one, that is a check. In check, maybe you have seen MICR code will come, character recognition. With the help of this, bank will identify whether this check belong to you or not. Okay, the except one, all others are relating to digital transaction. Then move forward to next one, role of RBI as a banking regulator. Coming to RBI role, RBI is a central bank of India, that is which control and govern, what we will say, other bank. Okay, it is manage other banks. Then apart from that, if we move further, functions of RBI, monetary authority, that is within in India, they will manage, they will formulate, implement and monitor monetary policy, they will do regulate and supervise financial system, they will regulate banking system in India, manage foreign exchange, that is foreign exchange also they will manage with the help of Foreign Exchange Management and Management Act 1999. Then apart from that, major functions of issuer of currency, that is they will print currency. Then development role also they will provide in, maybe you have seen agricultural loan, they will provide industrial loan, they will provide, they will supervise and regulate settlement system within India, that is they will help bank. Other related, that is they are banker to bank, that is head of a bank, and they will they also act as a merchant banking function for state as well as a central government. Then key points what we have, CRR, it is just like a function, percentage of a bank total deposit that is have to be kept. That is, if you just look this example, you will understand. That is, if customer deposit 100, 96 bank have to kept, and 4 rupees rupees they have to deposit to bank if CRR rate is 4%. If CRR rate is 4%, then what they have to do, they have to deposit 4% to RBI, they have to keep that one. That is, nowadays it is going 4.5. That is, if I deposit 100 rupees, means 4.5 rupees they have to deposit to RBI. On that one, bank won't get any interest. Okay, but they have to maintain that one for safety purpose. Then SLR, that is statutory liquidity ratio. That is, if you have seen here, in the form of liquid asset, gold, cash, securities, they have to deposit. That is, nowadays it is going on 18%. That is 18%. If I deposit 1000 rupees, means bank have to keep 4.5% cash, okay, in RBI CRR account. Then 18%, that is 18 rupees they have to deposit to RBI in SLR. But in SLR they will get interest. Okay, they will get interest. Then apart from that, bank rate, it is the rate charged by central bank for lending fund to commercial bank. If RBI is providing amount to commercial bank, the rate to which what we will say RBI is charged, that is said to be bank rate. Repo rate is just like repurchase rate, that is lend money to commercial bank. That is, if RBI central bank provide amount to commercial bank, in that situation during shortfall, that is very important, during shortfall, that is said to be repo rate. Reverse repo rate is also there. If commercial bank provide amount to central bank, that is reverse repo rate is also there. Then marginal standing facility, that is it is a window for bank to borrow from RBI in an emergency situation. In MSF, that is marginal standing facility, interest rate is high compared to repo as well as a bank rate. Then apart from that, base rate, it is a minimum rate set up by RBI of India, below which a bank cannot allowed to lend. That is, they will fix amount. That is, if a bank have to provide a loan to customer, means they have to charge that one. Okay, the rate will prescribe by RBI. Saving deposit means, earlier I have seen, nowadays it is very less, but they will fix. RBI will fix and tell commercial bank that at least you have to pay this much of amount to your saving bank account holder. So these are all the rates we have. I hope you have understood